On the date of acquisition of share by H company is acquiring in S company, later has undistributed profit of 18,000, 1,20,000 divided by 100 is 1,200 share. Out of that, H company acquire 800 share. The balance 400 goes to minority. How much paid more? 40,000 is considered as a goodwill. In the balance sheet, either the capital reserve or the goodwill, any one of the two should appear. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Year College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Corporate Accounting 4th semester, Unit 3, Session 2 in favor of holding company. I told in the last session, what do you mean by holding? A holding company is one which holds more than 51% share of another company. Another company becomes a subsidiary company. Assume that there are two companies, X company and a Y company. X company taking the shares of Y company more than 50% is called holding company. Yes, become the minority or subsidiary company. So, we are going to prepare a consolidated balance sheet of holding company and the subsidiary company. In the adjustment, any profit available before acquisition, it is called capital profit. If there is a reserve, it is called capital reserve. After acquisition, it is called revenue profit or revenue reserve. Whatever the data is available before acquisition, assume that X is a creditor, Y is a debtor. Once they combine question, when they are combined, consolidate here, question of debtor and creditor does not arise. So whatever the amount available debtor, assume that 6,000. 6,000 should be deducted from the debtor, 6,000 should be deducted from the creditor. It's called mutual adjustment. If there is a BP or BR is there in the adjustment, deduct from BR, deduct from BP. That's called mutual adjustment, we say. We'll move on. This is a problem. From the following detail given below, prepare a consolidated balance sheet of H company and its subsidiary S company balance sheet as on 31st December. So there are two companies are there. One is called H company, one is called S company. Assets of H company, assets of S company. So if you go through, then on the date of acquisition of share by H company is acquiring in S company, later has undistributed profit of 18,000, reserve of 12,000. So before acquisition, they have profit of 18,000 is called pre-acquisition profit. It is called pre-acquisition reserve. The value of building and plant and machinery of company was considered to be 1,36,000. If the building value goes more, assume that, what's the building value here? 1 lakh rupees. Now, it become 1,30,000, considered to be 1,36,000. How much more? 36,000 is called capital profit. Regarding machinery, 50,000 is there. Today is valuing how much market? 32. 18,000 has come down. It is called capital loss. More capital gain, less capital loss. Debtor of H company includes 11,000 due from S company. Who has to pay? S company has to pay to H company before holding one by one or before consolidation. Once you become consolidation, the question of debtor and creditor does not arise. Deduct 11,000 from debtor, 11,000 from creditor. And also bills payable of H company includes a bill of rupees 2,005 accepted in favor of S company. So here the bill is there. So this 2,500 should be deducted from BR as well as on BP. Mutual adjustment. Here also you understand that how to treat this 11,000. Deduct from debtor, deduct from creditor. 2,500 is a BP. Deduct from bills receivable, deduct from bills payable. Both is called mutual adjustment. What is the total number of shares here? 1,20,000 per share value, share of rupees 100 each. The total number of share 1,20,000 divided by 100 is 1,200 share. Out of that, H company acquire 800 share. The balance 400 goes to minority. So they are in the ratio of 800 to 400. If you cancel 4 ones are 4 twos are. So they are in the ratio of 2:1. So 2 goes to H company, 1 goes to S company. Hope you understand this. The total number of share is 1,200, 800 occupied by H Limited, 400 by minority. So they are in the ratio of 2:1. Total profit 42,000 as per at the time of acquisition we have got 18,000. Difference is 24,000. If 18,000 divided in the ratio of 2:1, 12,000 goes to H Limited, 6,000 goes to minority. Revenue profit is how much? This capital profit is gone. How much revenue profit? 24,000. If we divide in the ratio of 2:1, 16 goes to H Limited, 8 goes to minority. Then the total reserve available in the balance sheet is 30,000. At the time of acquisition, reserve is 12,000, is a capital reserve. The balance is 18,000, is nothing but revenue. 12,000 is divided in the ratio of 2:1. 8,000 goes to H Limited, 4,000 goes to minority. 18,000 is divided, 12,000 goes to H Limited, 6,000 goes to minority. Appreciation of building. So here we got 1 lakh rupees in the balance sheet. In the adjustment is 1,36,000. How much more? 36,000 is a capital profit. Divide 24,000, 12,000. Then the plant and machinery has been reduced. What's the value of the plant here? 50,000. Now it becomes 32,000. There is a depreciation of 18,000. This is a capital loss to the extent of 12,000 and 6,000. If we add this, all this minority, totally the minority interest becomes 70,000. It will come on the liability side of the balance sheet. Then cost of investment, calculation of goodwill. Cost of investment, we paid how much money? 1,20,000 for how many share? 800 share. The real value is how much? 80,000. How much more? 40,000, which is considered as a goodwill. Actually, you have to pay 80,000, but he paid 1,20,000. How much paid more? 40,000 is considered as a goodwill. In the balance sheet, either the capital reserve or the goodwill, any one of the two should appear. If is there calculation, capital reserve, capital profit, your capital reserve is 12 plus 8 plus 24. Your capital loss is 12 minus 32,000. Goodwill will go to balance sheet. 40,000 minus 32,000, that is 8,000 will go to balance sheet here. Totally capital reserve 12,000, 8,000, 24,000 minus loss. This is 12,000 minus 32,000. Goodwill go to balance sheet is 40 minus 32,000 is 8,000. Now come back here. While preparing the consolidated balance sheet, building old H Limited 2,90,000, S Limited 1 lakh, totally 3,90,000, appreciation of 36,000, it become 4,26,000. Regarding the machinery, H Limited 1,20,000, S Limited 50, 1,70,000 minus depreciation 18,000, it become 1,52,000. Stock, no change. If you add both, no, it becomes 80,000 plus 20,000 becomes 1 lakh. Regarding the debtor, 70 plus 30 is 1 lakh, but there is a mutual adjustment in the adjustment 11,000. 11,000 should be deducted from debtor as well as the creditor. It becomes 89,000. Bank 20 plus 10, 30,000. BR in the adjustment is there minus mutual. 20 plus 30, 50,000 minus mutual 2,500. Deduct from BR, deduct from BB, 47,500. Goodwill as per calculation is 8,000. So it will tally for 8,52,500. Come back here. Share capital H Limited is 4 lakh. General reserve is 1 lakh plus revenue reserve is 12,000. It becomes 1,12,000. Only revenue reserve should be added. Capital profit, capital reserve already utilized. Profit and loss account is 50,000. Add revenue 16 becomes 66,000. Then creditor 50,000. 30 plus 20 is 50 minus mutual. This is 11,000. Deduct. Balance is 39,000. Bill payable totally 28,000 minus mutual 2,500. It becomes 25,500. 8% debenture 1,40,000 as per the balance sheet. Then minority interest, what we calculated 70,000. If we add all these things, it will work out 8,52,500. Very easy, 15 marks question. Once again, I will repeat. Total number of share 1,20,000 divided by 100 is 1,200 share. H company take over how many share? 800 share. The balance share goes to minority called S Limited. H is West. 800 is to 400. 800 goes to H company. 400 goes to S Limited. Then out of 1,200, 800 is H Limited. 400 is minority. They are in the ratio of 2:1. The total profit is 42,000. At the time of acquisition is 18,000. So revenue is 24 is the revenue profit. All these profits should be divided in the ratio of 2:1. 18,000. 2 by 3 of 18,000 is 12,000. Another 6,000. Revenue profit 16,000. 8,000. Total reserve 30,000 minus capital reserve 12,000. This 12,000 will become 18,000. 12,000 in the ratio of 2:1, 8,000, 4,000. So you have to divide capital profit also, revenue profit also, capital reserve also, revenue reserve also. 18,000, 12,000, 6,000. Appreciation of building 36,000, 24,000 goes to H Limited, 12,000 goes to minority. Machinery totally 18,000 is a capital loss, 12,000 goes to H Limited, then 6,000 goes to minority. So your capital profit here now, see that your capital reserve is 12,000. Come back here, your capital profit is 18,000. Then appreciation is also capital profit is the capital loss. 12,000, 8,000, 24. 12,000 minus 32,000 share. So goodwill go to balance sheet 40 minus 32,000. So here combination consolidated balance sheet. H Limited 2,90,000, S Limited 1,00,000, it become 3,90,000. Appreciation 36,000, it become 4,26,000. Then regarding the machinery, H Limited 1,20,000, S Limited 50, it become 1,70,000 minus depreciation 18,000 become 1,52,000. Stock 1,80,000 plus 21,00,000. There is no mutual. Debtor 70 plus 30 is 1,00,000 minus mutual is 11,000. It become 89,000. Come back here. Share capital H Limited 4,00,000. General reserve 1,00,000. Revenue 12,000. 1,12,000. Then profit and loss account 50 plus revenue 16. It becomes 66,000. Creditor 30 plus 20 is 50 minus mutual is 11,000. It becomes 39,000. Then BP, here bills payable, total 28,000 minus mutual 2,500 become 25,500. 8% debenture 1,40,000. Minority interest 70,000. Total of the both sides 8,52,500. Hope you understand. Very easy. You have to divide. There are two. Before acquisition, capital profit. After acquisition, revenue profit. Before acquisition reserve is called capital reserve. After is called revenue reserve. Both should be divided become the H Limited and the S Limited. Then cost of investment face value, share of capital profit, share of capital loss you have to take. Then if they pay more, it's a goodwill. If they pay less, it is a capital reserve. Either the goodwill or the capital, one should appear in the bar. If there is a capital reserve, it will come on the liability side. If it is a capital profit, it will come, that is a goodwill, it will come on the asset side of the balance sheet. Hope you understand. We have solved the second problem. We'll go in the next session, third problem. Till then, goodbye. Meet in the next session.